No. We good now. Y'all hear us?
You can hear us now?
Yeah, we good. I had it on mute for a second.
All right.
Sometimes YouTube be playing. They put the ads on.
All right. We on. They can hear us now? We good? Mic check. Mic check. 1, 2. What is this? Santana's back to business.
Shout out to Santana. He locked up right now. Hold your head.
Yeah, for sure.
Bro, what up? Ian, what up?
What's going on, man? Squeeze the juice out the headphones like Jada say, who y'all got in the battle?
Now we're going to get to that later.
Yeah, we got to get to that. We definitely
going to get to that. We got to acknowledge that we're going up a little early out of respect for 914 and the whole NY. We got Jada versus Fab at 8. So, we'll make sure everybody gets to enjoy that for New York and for the entire country.
Yeah, we had to move this up a little early. We did this a few times in the past, but we moved it up to 6 o'clock instead of 8 o'clock Eastern time. And we did it out of respect for the New York Giants, not the football team, but Jadakiss and Fabulous, pioneers in the game, legends in the game. Legends. So Swiss Beats keeps. We gotta talk to Swiss about this.
He keeps doing Mondays, right?
Come on, man.
He keeps interfering. He keeps interfering with our time on Mondays.
Yeah, he did the Teddy Riley joint. I'm like, damn, I don't even want to compete with that. Like, we want to enjoy that too. Then he did the Jagged Edge one. Now this one.
Yeah, this is the third time, so we kind of need some clarification what's going on, Swiss.
Don't you know we're not doing anything Saturday night?
Yeah, yeah. We gotta stop that. But first of all, Ian, what's going on, brother? How are you?
I'm good. How you guys feeling?
Good, man. Did you do something with Black Enterprise today?
Yeah, we just did it. Wrapped up about 30 minutes ago. It was fun. Shout out to Selena. So it's an honor to even
Selena Hill.
Yeah.
Oh yeah. Shout out to her.
Yeah. So of course I gave y'all, y'all shout out. I appreciate y'all so much. I will say, like, rocking with y'all speed up a lot of things that was supposed to happen like last year. I used to get it's gonna come through, now it's like, yeah, let's get on now. So no, I definitely appreciate that. But yeah, I had a blast chatting with her. She's super amazing. So that'll be dropping Thursday.
Yeah, she's dope. I've been following her. She actually wrote our story.
That's amazing.
Yeah, shout out to her.
So that's dope. That's dope. It was an interview, or?
Yeah, it's gonna drop. It's like 15 minutes. So yeah, I was honored to be on that platform because reading that as a kid and watching that platform as a kid, it's a dream come true. So I know my mom. So shout out to my mom, my dad, all my aunts. When we used to be in the barbershop at Slim's reading Black Enterprise and Jet. So yeah. I got to check one of these off.
That's dope.
That's dope. Shout out to Mark early on with the super chats. Cam Newton is a Patriot.
Yeah, we just spoke about that.
Yeah, we just got finished talking about that.
Since when? Since when? That? Nah, I mean, since when does an MVP get $1 million deal? It don't make no sense, man. That's still Cam Newton. It's still Cam Newton. Like I said, his injuries, you can question. The talent, you can't.
That's true. That's very true.
Yeah. That was a surprise to see Cam Newton go to the Patriots with an opportunity to compete for the league minimum contract.
Yeah, you ain't like the language.
It's interesting. It's interesting. So, but we'll see. We'll see what happens.
He motivated. He gonna ball out, I think.
Yeah, I think so.
Hopefully he got something to prove, and he can he could prove that he's more than just a league minimum type of guy.
Yeah, he's doing it for New England though. That's New Yorkers, man. That's tough. It's tough, man. We can't support anything Boston being from New York, man.
Yeah, but let's get into it. I guess we can talk about. You want to say the disclaimer, Troy? You have that?
Yeah, I got the disclaimer right up here. I'll read it out for y'all. Give me 2 seconds. Ian, are we doing our 2 screens today, or what's going on?
Just one.
All right, got you. All right, so here's our disclaimer, the EYL disclaimer. So our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you hear or find on our show and wish to rely upon, whether for purpose of making an investment decision or otherwise. So that is the disclaimer, guidelines. We got to get that out the way first.
Yeah, for sure. For the legal department, for sure.
Shout out to the legal team.
And then also the guidelines. If you have any questions about EYL University, just please feel free to email us at info@earnyourleisure. If you have any questions for Red Panda, please feel free to email Red Panda or also hit Ian on Telegram. I believe that's the best line of communication.
That's the best bet. Yes.
Yeah. If you have questions, please try to keep it to one question, and please try to keep it to non-related, like just individual stock questions, more investment-based questions. That way we can be fair to everybody and keep the conversation moving along quickly. And yeah, that's the disclaimers, that's the guidelines. I think we're ready to get into it. Right?
Yeah. Red Panda fam is in here crazy. They on YouTube going crazy already.
Shout out to Red, my family. I love y'all.
Shout out to the Panda. They putting them Panda signs up. Shout out to all the earners that's in there as well, man.
Yeah, for sure. So yeah, let's get into it. It's been a lot of stuff that's been happening in the market lately. Last week the market was down heavy. Today the market was back up again. Coronavirus. The coronavirus is something that is something that we can't shy away from, because it's not going anywhere. And it's like, the economy started to pick back up again. And now you see states like Texas and Arizona and Florida, and now they're starting to, shut down bars. Even in California, they shut down the bars, and they're starting to peel back on some of the freedoms that they have given to people. And that's really took a major hit on the economy. And it just goes to show with the stock market, a lot of times it's not so much based on like the actual numbers, but it's more so based off of projections in the field. Mm-hmm. So it's like a governor just saying that they're going to just cut back and close bars in California or even Arizona. It's not a tremendous thing to the world's economy, but it's a feeling that we're starting to go backwards. Mm-hmm. So now that's why you see. So yeah. So what's your thoughts before we go into details? What's your thoughts on the general market right now with the coronavirus?
This is why I've been trying to tell everybody to stay in the house. So when they start shutting things down, it's just a signal. And for my small business owners, like, we sympathize with you, because if you don't have people to come in and shop with you, it's going to affect revenue. So first thing first, man, our thoughts and prayers are with you. If we can do anything to help, please let us know. Secondly, this is one of the biggest reasons why I say every business owner should tie some of their money into the market, so you can have better businesses pour money into your company. So until these cases, and I think originally when we first started talking, I think we said November as when we think it will start to get better, November, December. Mm-hmm. Man, January. It may be January until I see seats getting filled back up in Toyota Center, the United Center. Man, I don't think it's going to be over for a while. So you guys got to buckle down. I know some of you are going to ask, is it a V recovery or W? Either one. You got to invest every single month, regardless of it. But Corona is going to have a significant impact on business here in the States, at least for the rest of this year. You can pretty much call this year a wash. I think so.
I mean, it's going to be an interesting time I think the next 30 to 45 days is going to be very interesting with the expiration of the PP loans. I think the deadline's coming up. I know that unemployment, the extension is about to run up on July 31st. So it'll be interesting to see, right? When people stop getting that extra 600, if they don't create a stimulus where there's an extension, people are going to run out of money very shortly. Shortly. It's around the corner. So we got to be very mindful of that.
Yeah, I agree. So yeah, it'll be interesting to watch the market. As you said, I mean, the market will probably be up and down for a while now because the coronavirus is not going anywhere anytime soon. So, if you're in it for the long haul, just have the patience and keep your emotions under wraps. But I believe, Ian, you had some slides you wanted to go into, right?
Yeah, I want to. You can let me.
I got you.
Thank you. I appreciate it.
Yes, sir. Shout out to MG the Mortgage guy on the super chat. What up, bro?
My brother, how you doing?
Yeah.
Man, we got to talk, man. It's been forever. All right, let me share. So once again, same thing. Disclaimers, guidelines, right? So informational purposes only. So consult with your advisor. I want you to be smart, investing at significant risk, right? But I want to cover over, like, in these times, we're going to come back to it. So there's going to be companies that are dominant. And let me know if you can see my screen.
Yeah, we're good over here.
Okay, great. There are going to be companies that are going to be dominant through and through, good times and bad times. So I like to draft the best players in a space. In the tech space, I think, of course, Apple, one of them, right? You guys already know how much I love Microsoft. One of the ones we don't put enough emphasis on because it costs so much is Amazon. But Amazon is one of the most unique companies. So there's actually like 80 reasons that makes Amazon incredible. I'm not going to go through all 80. I'm going to go through about 6. So I want to just guide you guys through what makes Amazon such a dominant player in this space, and it will be very reliable through COVID-19 until we recover and then after. So first thing first, Bezos is one of the greatest founders of all time. He's, if you guys go look, he actually started in banking. So he is really big on data, and we'll talk about predictive buying and all that later. But his background in banking, you guys can go to YouTube after the show and look at his interview about how he founded Amazon. So there was a sweet spot in the book space where there wasn't really a central player. So you had to go all across town to find books. And it's interesting how he cornered one part of the market and then used that same model to be able to go into other spaces, which I'll cover later. But every great company usually has a great founder. Apple is fortunate enough to have a great management team. Amazon has a great management team, but Bezos, he's like the Jordan of tech space right now. So reason number one, the quickest shipping, a most reliable retailer on the planet. For those of you that are young, you don't remember the days when you used to order stuff back in 2003 and didn't know if your product was actually going to show up. Amazon revolutionized the reliability and speed of getting your item. So for all my entrepreneurs, this is a great lesson. If you can save a person money or time, you will be able to have market share. Uber saves time. Amazon helps save time. Market Mondays help digest all the thousands of pages you have to read about investing and helps you save time. So that's the biggest advantage that they have right now, as the speed and reliability of their business. Incredible customer service. The thing that all of us as entrepreneurs have to focus on, and when you're looking at a company, if you should invest in, on a scale of 1 to 10, you need to grade how great is the customer service and the experience that the users are facing. That is key. Because if we get pissed off and we don't like a company, what are we going to do? We're going to go somewhere else. So we've all been to a restaurant where we weren't treated fairly, or the food wasn't that good and we went somewhere else. If I order from Amazon, is there anywhere on earth right now where I can get faster shipping? The answer is no. If anything happens with my order, refund policies is pretty amazing, right?
Mm-hmm.
So you want to tie yourself to a company that is going to treat their customers well. And as Trapper says, that creates a moat or creates protection around your business, or a fence around the herd, as some of the older business people would say, to keep people in. So this is one of his quotes, Jeff Bezos: if we focus on them, we will be fine. A lot of companies like to focus on shareholders meetings, right? I think you should focus on employees, but the most important thing to every business is your customer base. If you keep them happy, you have systems in place to keep them inside of your ecosystem, you will be fine. Amazon doesn't let a bunch of the data leak out, right? And they do a great job on focusing and doubling down on them. And that's one of the reasons they've been able to grow exponentially year after year. And this is a great quote. I think everyone should know this. No matter what the drama is, no matter what the external distraction is, the response should be to double down. Before Prime, there wasn't a place where we can get 2-day shipping. That was a revolutionary act in corporate. We know how long corporate takes to make a decision. So not only, and FedEx did this in the early or late 80s, early 90s, but to get things there quickly and reliably, and we've seen it with us during COVID. Man, Amazon boxes are flying across mailboxes and to doorsteps like crazy, because I know if I order there, my stuff is going to be delivered. So that reliability piece is very key. And that's one of the things that has made their business go up so much. Because if I have to pick between them and Walmart, or if we go to older demographic, Amazon and Sears, I'm going to get my stuff from Amazon before Sears, even, because Sears and JCPenney, all those legacy companies are no longer the stronghold in retail. So when you guys are like, what retail companies are great? This is the one that you need to lean on. And also the distribution channel is absolutely amazing, right? Prime Day has almost become a holiday. So 2 years ago, they had $4.2 billion in sales. That was more than Black Friday that year. So they give an incredible incentive to stay in their ecosystem and continue to buy. And let's be very honest, we're very happy to use Prime because we get more things faster than we can anywhere else. 50% of all retail e-commerce sales goes through Amazon. They are the plug. To make it super relatable, like they are the plug. Like where else? Yeah, it's like when you think about, you're going to check there first, right? So they have the stronghold on the market. And then shout out to my buddy Azim who sent me this, but they've acquired some amazing companies. So Whole Foods puts them into the grocery space. Zappos back in the day, kudos to Tony, put them into the shoe space. Zoox now puts them into the automated driving space. PillPack puts them into the pharmacy space. Ring, which got acquired, which Shaq was involved in. Shout out to Shaq Diesel. That is the security space, and then Twitch is a gaming space. So now you have 1, 2, 3, 4, 5, 6 other industries that you are now a part of with all of that data and all of those processes that you can then go in and dominate. So think of this. Like imagine if Amazon was Def Jam and then they got Drake, Nicki, Lil Wayne, 50 when he was at his peak. Then they went and got Justin Bieber at his peak and then Michael Jackson. You'll be like, gee, Def Jam is on fire. That's what Amazon.
Yeah, we got a question mark on the AMC move, so they could get into the movie space as well, potentially.
If anyone can turn AMC and that model profitable, it will be them. And the great part is they are about innovation at all costs. And some of the lessons that they've learned from the other industries, they'll find a way for it to be profitable, or at least acquire the customers as a loss leader and then move them into some of the other businesses that you have there. And finally, trust is the most important thing in any business. They built the most trust of any retailer, I think, ever in history. Then predictive recommendations. So if I buy a NutriBullet, automatically I'm gonna get a whole bunch of juicing books and detox books that'll come up. That data is incredibly important. And then we talked about this before with Apple and their app store. Amazon has a huge affiliate network. So that's like when a label signs a sub label, like when Def Jam get a deal to Rock and Murder Inc. back in the day. Same thing. You start to bring businesses inside of the business to keep more people inside the ecosystem. And that's one of the reasons why I love Amazon and why it's one of the most dominant companies on the planet.
No, I appreciate that.
That was a whole lesson.
Yeah, that's how we kick off Market Mondays now religiously for the last few weeks is the slideshow. So
yeah, I think really quick just to touch on Amazon, they're competing with Walmart in that one day space. And it's something that we spoke about, I think, on an episode, but it was like, especially in this time where you have commercial real estate, like Matt always says, commercial real estate is on the clock. You got big time malls closing, right? Amazon is trying to acquire malls, and like people looking like, why would they acquire malls? Well, they look at a couple of logistics. They look at, listen, the malls were the epicenters of cities. So they have quick locations to get to everybody within that city. Plus they have the plumbing infrastructure already that's there. So like as these malls and these stores start to close down, look for them to start just acquiring them. And now instead of 2-day shipping, now you have the 1-day shipping. And I don't know how you compete with that.
Shout out to Kane. This is the first ever $100 euro super chat. The first time we ever got euros. So
yeah,
shout out to Kane. I'm not sure where he's at because they don't use euros in the UK.
Yeah,
and I know we got most of the time our European listeners are in. So Kane, I'm interested to know where you're actually at right now because Mark is a super chat war. Mark responded with 99.99.
Yeah, Mark. Yeah, we don't want to get the people confused. Yes, AWS is the moneymaker for Amazon. The cloud space is obviously, and most people don't know that. So yeah, I'm glad you said that. But yeah, the cloud space is where they make a ton of their money. Like I think it's 60% of their revenue comes from the cloud space business, and that's not going anywhere. It just grows.
Yeah, I mean, if honestly, we could do an entire 2-hour episode on why Amazon is dominant. If we go from beginning to now. They've made, and of course, they've had some losses as well. But if you're a business owner, you really need to study their business model from top to bottom. But from an investor standpoint, my God, they have a true stranglehold on the market. Like that run that 50 went on in 03 with Get Rich or Die Trying. That's them in corporate.
Okay,
except that their run never stopped.
So they just informed me that it's actually a pound. It's not a euro. It's pounds. 100 pounds. So he is from England, from London. So I
Shout out to all the
apologize. I
London folks.
apologize about that to all the
Shout out
European
everybody in London town.
listeners out there. But shout out to everybody in London, man. That's a real stronghold for us. So we appreciate
Going on what 11 o'clock at night out there.
All of us. Shout out to Mark, man. Challenge accepted. So all right, let's get into some questions, because actually I had some stuff I want to talk about, but let's get into some questions from EYL University and all of the new members of EYL University.
Yeah, shout out to all the new members. Boss, what's going on? Unmute yourself. You've been unmuted.
Hey, fellas, how you doing tonight?
Everything great.
How are you?
Good. How are you?
Good, thank you. First and foremost, congratulations on being on top 10 on the podcast. Keep up the great work.
Appreciate you. Appreciate you.
I recently received a like a financial report from Groupon when I had Robinhood. They sent it to me in the mail last week. I just want to know, as a new investor, how the best to like understand how to read it correctly.
So you invested in Robinhood. You're on Robinhood's platform, and you brought Groupon, and then they sent you like the prospectus.
Correct. They sent me a financial report, last year's financial report. How to like go about learning how to read a financial report from any company that one would invest in.
Good question.
Good question. Yeah, I'm gonna tell you. Whatever you don't know, Google. So that's gonna be your homework. So if you don't, so the reason I say that is because I want you to be in a position that no one will be able to take advantage of you and tell you something that isn't true. Now, in perspective, Groupon stock is on the POS Hall of Fame, right? So it's top 5 dead or alive for real. So they've been down since at least 2018. But if you go back and look at that, go back to that 5-year, you can see. But really, like if you go back even back to 2013, 2014, it's been sliding down. But any term that you don't understand, I would just highlight it, go to Google and say, what does it mean? Because sometimes the information seems convoluted. And then even if you look at earnings per share, just Google earnings per share. But maybe one day we can hop on and then just break it down with you. But it's not as complicated. But if you look at the chart, whoa, baby, let it go, please.
Yeah, you want to look at some of the most important things, that's assets, liabilities, stuff like that. Like, because especially with these financial reports, sometimes it's like, all right,
I almost feel like you're hearing another language almost.
Realistically, nobody's reading that. It's 100. It's like 50 pages. I'm not reading it.
Yeah, I get
so
them.
just give me the abbreviated Cliff Notes.
Yep,
and I'll be good. So yeah, but yeah, yeah. That's pretty much
just Google. Yeah, just Google it, and you'll be good.
Boss, we appreciate you, bro.
I appreciate you.
Hey guys.
You want to look at their debt though. The debt's extremely important, and the assets is extremely important.
Yeah. Linda, we coming to you. Shout out to everybody on YouTube. Somebody asked if 6 o'clock the new time. No, 6 o'clock is not the new time. We're just doing it out of respect for our 914 brothers.
We just did this. This is just a one-off.
Linda, you're unmuted. Unmute yourself. Linda.
Marcus.
Come on, Linda.
All right, Linda. I'm putting your hand down. Marcus, what's going on? Unmute yourself. You've been unmuted.
What's up, fellas? How y'all doing?
Everything great.
Good. How are you?
Good. It's my first time actually going live with you guys here on Zoom. So
welcome, man. Welcome. That's dope.
Welcome to the party.
Thank you. Quick question. I know you guys always talk about investing into tech, and I bought into Spotify when Joe Rogan initially signed that contract. It jumped from 120 to 180. So I only had about $1,000 or $1,200 to invest, and I bought 6.5 shares. And now I see that it went up to 260. And if I get more money, is it smart to invest at that price right now? Or do y'all think it might eventually just go down, or I should cash out right now or continue to invest in it?
Never buy the high. Good company, but if I remix the 10 crack commandments, number 5 will be never buy the high. So you got to wait for it to come down a bit. Kim K being there is going to help for sure. And then I think they're going to end up being like the universal records of podcasts.
Yeah, that's why I see them going. They're signing up everybody that they can. They're spending that money. They're trying to compete with Apple in the podcast space, man. And they're throwing dollars at people. Hopefully they throw it at a few other guys we know.
You guys think this is high, or do you think it can get to like the Netflix level and I should probably buy more?
It's at 271 right now. It's at an extreme high. If I look at the technicals, maybe in 3 years it can get to 375. But this is one of the great lessons too. If you're going to invest in something, you have to hold it minimum of 5 years. Minimum, like the true time range where you guys need to hold is 30. No one wants to hear it, especially in our community. The true number is 30 though. If you want wealth, I know everyone's talking about wealth building, generational wealth. That is going to have to start with us. Generational wealth is not our kids doing it and then taking care of us. So if it falls apart and it's no good, you can still take the profit out and then put it into another company. But I think Spotify will be around. I think they'll at least have a 5-year run. So
yeah, we spoke about it last week. Where they just signed a deal with Comcast to actually be put on TV. So you figure that they're gonna have now network television, right? Actually cable television. So you figure like these podcasts that you hear on audio will probably have a visual to them too. So they're coming into the game and they're not playing. They're trying to take over this podcast space.
Yeah, and like you said, I like that as far as never buy at a high. Never buy a stock at its all-time, like Spotify, I believe right now is at its all-time high or close to it. Close to its all-time high right now. So I mean, even if it probably does have an opportunity to go up tremendously higher, but there's going to be a pullback because in the market, people want to take gains. So a lot of people made a lot of money off of Spotify. That's how you have to look at it. Institutions.
Yeah.
The market's really moved by big money, not really so much retail investors, institutional investors, hedge funds, pension funds, things of these nature, mutual funds. So, if you made $100 million of profit from Spotify, it might be a good time to take some money off the table. So, they kind of wait for people to kind of get in at the top. And then it's like, all right, they'll take their profits, let it go lower, and then buy back in lower. So you're chasing a rabbit when you're trying to buy stock at its all-time high. Of course, there's always somebody that's like, well, what about in 1987 when Apple, of course, there's always an exception. There's always an exception to the rule. But in layman terms, and the easiest way to kind of understand it is that if you have a stock on your radar, just wait, and whether it'll pull back because the economy will crash, or the market will actually pull back, or the stock will just have a pullback. And now you can, even if it's at a 10% or 15% lower price point, it'll be beneficial as opposed to just buying it at its all-time high or close to it.
Yeah, the hedge funds and pension funds are the whales. The retail investors, we are like goldfish. We just have to follow what they do. So like you said, if they start to take the money out, it'll fall apart quickly. So for all my retail investors, be very careful. Don't buy at those highs. Wait for it to drop back, and you'll be golden. And one of the reasons, even like with Apple, Microsoft, Tesla, Google, Amazon, one of the reasons I'm big on them, one of the protection mechanisms, hedge funds love Apple. So I'm not going against the great. That would be like, well, I think Drake could do well next year. And I know a lot of you be like, well, anybody can recommend Microsoft and Apple. And I'm like, yeah, but you want safety. Like, I don't want sensationalism. If you want drama, go slap a lion. And then
go slap a lion
on Tiger King. Like, if you want excitement, go do something else. I want safety more than anything. So like, give me OVO Drake and give me somebody who I know already moving units. I don't want to take a gamble on an up and coming artist out of Arkansas. Shout out to all my folks in Arkansas.
Little Rock.
Yeah.
Let me just say something about the before we go to
appreciate
the next
you,
question.
Marcus.
I just want to say something about
Excel Gush. Remember Rashad? Don't buy.
Don't do that. Don't do that.
Guidelines.
That's from the legal. That's from the legal department.
The legal department said that.
The legal department will have us off YouTube if you guys put your retirement accounts in Gush.
Don't do it.
So Gap. I just wanted to say something about Gap.
Let's talk about that.
Yeah,
see some questions coming.
People was asking about Gap, and we posted that on Earn Your Leisures page. Kanye West actually tweeted that the Yeezy brand is doing a collaboration with Gap, which is ironic because he used to work for
Gap,
Banana Republic, I believe it was.
No, it was Gap. He worked in the Gap store.
On graduation, he talked about that.
Yeah, it's crazy.
About Gap.
Yeah. So it's come full circle. So I think when he tweeted that, the stock went up like 30% that morning. So of course, it's been hot. But once again, going back to the technical charts, Gap's been a company that has struggled for a long time. They have a terrible 5-year chart, terrible 1-year chart. Retail, you guys, if you follow my own personal page, I try to save my opinions for my personal page, not Earn Your Leisure's page.
Yeah,
I'm very strongly opinionated about brick and mortar stores. So Gap is not something that I'm bullish on. Banana Republic, all the things that Gap
they own by them.
Own Navy.
Yeah. Actually,
Old
so Old
Navy
Navy,
dead.
that was Gap. That was under Old Navy was under the mothership, but they actually left Gap.
They left.
They're their own entity now.
Good for them. So what I'm saying that is that you don't want to buy stock. We talking about, this is an investment show where we trying to, educate you guys on how to buy real solid companies. You don't want to buy a company just because your favorite celebrity tweeted that he's going to do a one-off partnership. That's probably not maybe a swing trade, and intraday trade, day trade possibly, but it's still not based on solid ground.
The work hasn't. I mean, the final paperwork hasn't come out. I think it's going to be like a 10-year deal, maybe. So we saw what the Yeezy brand has done for Adidas, right? It's extremely profitable. It made him $1 billion. But if you look at the stock, like you said, the chart, it doesn't look good. In my mind, I was like, look, if the line's not coming out to 2021, I'll just follow it. Maybe I'll put an option in for 2021, late in 2021, to see what the option looks like then, or what the stock looks like then, because you know what? We know what Yeezy does to a brand. Like, he could revitalize a brand. And if he does, I mean, great. He's done it with himself. He's done it with Adidas. Let's see if he can do it for the third time.
Yeah, it's too soon. Yeah, the high was 2014 was 46.85. 6 years ago, it's at 12.51. I mean, hell of a deal for Kanye. Like, kudos to him, like, growing up in the Midwest when he was so slept on for all those years, and got told he was crazy to even want to be a designer. To see his evolution since 2001 has been amazing, right? But it's too soon for Gap. And let's be honest, y'all won't wear no Gap clothes.
Nah.
Yeah, they gonna. That's the thing. Nobody's wearing the Gap clothes, but when I've been to a Kanye concert, I promise you, and literally people stand in line just for the merch. They don't even watch the show.
No, they're gonna wear Kanye.
They're gonna line up.
That's what they're gonna do.
If
Kanye puts his name on it, they're gonna buy it.
But I would give it at least a year to see if his involvement will boost the brand up, and then you got to consider how much debt they may have.
Yeah,
not yet. It's too soon. But
I mean,
eyes on it.
That's how powerful he is. The stock went up 17%. They added $500 million to their market cap in a day.
Nah, Yeezy
different.
Yeezy different. Yeah. Shout out to Kanye. Somebody else said Macy's.
We're gonna talk about Macy's. Their earnings is coming. We're gonna hold on Macy's. We're coming back to Macy's.
Shout out to everybody
top
on YouTube.
5 dead or alive too.
That's a fact.
We're coming back to that. Hold on.
Macy's in the great.
Hold on. That earnings is coming.
Shout out to everybody on YouTube. If you guys can just take a minute and like this video, we would greatly appreciate it. Helps out a lot. Thank you.
Chris,
EYL University.
Chris, what's going on? Unmute yourself. You've been unmuted.
What's going on, gentlemen?
Everything good?
Good.
How you doing?
Just a quick question. In NIO, I got into NIO at $3.32. What I'm trying to figure out is my exit. What I'm trying to figure out is, how do I exit? Do I exit or do I hold and rebuy more of NIO?
You got in at 321?
332.
332. You should take profit. You should take profit.
Okay.
The highest that it was is at 1380, and that was in 2018. It's coming close to those highs. Like, it's a good trade, not a good long-term investment yet. Like, you up more than, and I don't listen. Some of these gains because of Corona are unheard of. Like, some of you guys are knocking out 100-200% in trades, like it's nothing, right? So I know you feel like you may miss out, but I would rather you get out before it slides back against you and be like, dang, I could have took profit on it. I would probably take profit on it.
NIO is the automobile industry, right? The virtual cars, those self-driving cars. Is that NIO?
I don't want to pile up on them too, but they in that top 5 that are lawless.
Yeah, that's the company. That's the company backed by China.
Yeah, backed by China. Yeah. Well, we was looking into them last week. That's funny you said that. He didn't put it on the top 5.
Good trade, but terrible long-term investment.
All right.
Okay,
Appreciate you, Chris.
Appreciate you, brother.
Ray,
great trade though. Great trade.
Ray, this is a new one. Ray Cousins, what's going on? Hold on. He put his hand down? Oh, there you go. Ray, unmute yourself. You've been unmuted.
Well,
now he's there. Ray, you gotta say something, bro.
Guess not.
Don't be shy, brother.
Rachel.
Oh, we're gonna go to Rachel then. Rachel, unmute yourself. You've been unmuted.
Hello?
Yeah, Rachel, we hear you.
Hello.
Hey y'all, sorry I'm out of breath. I'm out working out while I'm listening. But I just had a quick question. It's my first week as an earner, and so I don't know the range of questions, but I was just trying to see y'all's opinions on like stock, employee stock purchase plans, because I work for Apple, and so we get like the 15% off. And after doing research, everyone's like, you should sell immediately so you can get the 15% discount. But how do you guys feel about that and diversification and stuff?
Yeah, well, first and foremost,
Welcome.
thank you and welcome. And yes, for anybody on YouTube that's not really sure what's going on, the people on Zoom are members of EYL University. So thank you to everybody that's part of EYL University. It's a growing community that's growing at an extremely fast rate. So if you're interested, we still are running a 40% off sale, different price, but it's 40% off of the annual membership code earners. So Rachel, thank you for joining. My personal opinion on that is it's always a good idea, especially if the company is good. So like stock in Apple, Microsoft, Google, if you work at a company like that,
Load the boat. I'm sorry.
How much can you get?
Load the boat.
If you can get 15% off in Tiffany's, or if you can get 15% off in Louis Vuitton, of Gucci, these are things that you have to take advantage of. 15% off in Apple. And I wouldn't necessarily look at selling it right away. I would hold it long term. That's a long-term play right there.
How long have you been there, Rachel?
I've been with Apple for over 5 years now.
Oh my! Load the boat. Load the boat.
Year, like actually knowing about stocks. So every time I got them, I just immediately sold them. So now I'm just like, I should be holding, right?
We gonna make that a drop, Ian. Yeah. Load the boat is gonna be a new
boat. My God, Rachel. So working there, you working in the retail store?
No, I'm a creative media specialist, so I work in like a kind of, it's corporate, so I don't work there.
Corporate.
Oh my God, load the boat. Whoever told you to sell, they can't be in your top 5.
But you know what though? That speaks to the point of financial literacy does not discriminate, and it's not because obviously she's extremely intelligent. Mm-hmm. She works for Apple in corporate headquarters. But she probably just wasn't taught about stocks and understand how they work. So she was getting a discount on Apple stocks and not really taking advantage of it and selling it just because she just didn't fully understand. Mm-hmm. So when we talk about learning, there's no shame in not knowing what you don't know. Yeah. And it's not something that is just like a lot of times people think like, if you're a doctor, you're a lawyer, you went to sometimes doctors don't know anything about finances at all. So financial literacy is something that every single person, whether you went to college, whether you didn't go to college, whether you work in the corporate world, whether you're a blue collar worker, everybody needs to take advantage and learn.
I think that's one of the best things you ever said to me when we were teaching lessons. Like there's no age limit. So the kid at 11 could go teach his mom who's 35. You know what I'm saying? Like a lesson that he learned in the classroom. So yeah, that was a great question. But like Ian said, load the boat. I would.
Rachel, the YouTube comments going crazy. So if you get a bunch of DMs today, be careful. The vultures are out. So I just want to give you a little heads up.
I see like 5. Is she single?
She's single. I'm like, yo.
So, they want a 15% off discount. They about to
marry you for the 15.
Start a family for a discount. Unbelievable.
Right, thank you guys.
Thank you for the question.
We appreciate you.
Thank you. Shame on you, YouTube. Shame on you.
We need a discount on a new phone. All right, Oscar, we coming to you. Unmute yourself. You've been unmuted.
Shout out to YouTube. We hit 1,000. If you guys can like the video.
I appreciate y'all.
What's good?
What's going on?
Hey, yo, this is my first time ever on here. Shout out to EYL. Shout out Ian. I've been following you.
I love this energy. I love this energy.
Come with it.
I'm excited. I'm 24.
Where you from?
North New Jersey.
I knew.
Okay.
Brick City. Shout out to Brick City.
Yes, sir. So, all right. So I actually have an investment. A trading question for Ian.
Okay.
I know you shared, because I'm part of the VIP list.
Yep.
And I know you shared about, I think it's called the Red Panda strategy or
a sniper. Yeah, go ahead.
Yeah, the sniper strategy. All right. So I actually went out, I got me my computer and everything. So I'm actually about to get into it. My question is, you know how you said that it was like $500 per contract? Like,
yep.
Is it within NinjaTrader that that I could set that up or whatever?
Yeah, NinjaTrader or Infinity Futures are the two brokers that you can use to trade futures on discount. So if you trade ES on TD Ameritrade, which is a great platform as well, it's going to cost you $13,200 to trade the ES. 500 on Ninja. Now, because you have the discount, I got to tell you, do not overtrade.
No.
Do not overtrade.
Nah, I'm gonna follow your rules. That's why I was thinking of go ahead and take take the shot for it. Because I've been
No, but even better, before you sign up for anything, before you fund an account, this is the great part. You can go out and practice for free.
Yeah,
so
exactly.
Go take you 50 practice trades, fire away, enjoy, and then report back to me in about 2 months how it goes for you. But yeah, if you got any other questions, I'm happy to answer them for you.
Well, yeah, my next question was gonna be
guidelines.
How would I contact you?
Guidelines.
Yeah,
Guidelines.
I know.
Guidelines. How you gonna say you follow me and then not know how to contact me? Instagram me. I got you.
No, it's just that you're a very busy guy. That's why. And I be commenting and everything. But I know
I love the energy and the positivity.
Yeah.
I'm a reply. I
Yo,
promise.
Oscar, you know he's gonna be here every Monday, bro.
Of course.
I'll
That's
be
why
right
I
here.
signed. That's why I took advantage.
Yeah, I love
guys
you, bro.
had that discount. Love you too, guys.
Appreciate you.
Appreciate you, family. Welcome to EYL.
I tried to let him let it go.
I just think the guy. Linda, we coming back to you, Linda. Come on. You a regular, Linda. You know how this works. Unmute yourself. You've been unmuted.
Hello.
What's going on?
What's going
Linda,
on?
how you doing?
Hi. Yes. Thank you, guys. Sorry about that.
No problem.
I have a question. Okay, so I don't know the name of the company, but from my understanding, there's this private company that now has access to like a lot of the 401k and are going to start, putting in a lot of fees, and some fees because they're private, they don't have to disclose it. So I was thinking that I wanted to, because it's not really doing that, it's not performing as well as I would like it, that I wanted to take out my 401k, because I understand now we don't have to worry about the penalties, and then put it in a Roth IRA. And Ian, do like your retirement pick.
Mm-hmm.
I just wanted to know what you think about that.
Anytime that you can say, I'll throw the oop to Rashad in a second, but I think anytime that you can cut down on fees, it has a tremendous impact. So, I mean, we've talked about compound interest before, but the other side of it is like if you're paying 4% in fees or 3.5% in fees a year, if you multiply that over 20 or 30 years, my God, it adds up. But I know a lot of people are worried about that, but I think one of the reasons why we do this show is so we can help educate, and then you can then take the advice. Go check with your advisor. We got an amazing advisor here, or Rashad. So a lot of you should be trying to holler at him when Michael not screening them emails. And but if you can save fees and self-guide or have Rashad assist you, that's something you definitely should do.
Okay, definitely. And Rashad, how can I get in contact with you?
Oh, good question.
Can you put my email? I'm gonna put my email in the chat for the earners. Yes, I put that email.
Awesome.
Yeah.
Okay.
So yeah, everybody.
Thank you so very much.
No problem. Everybody at EYL University, they got direct access to me. Please don't abuse it.
Mark said just roll over the account to IRA with no fees. So shout out to you, Mark, again on the super chat. Man, he like
Mark going off.
Yeah, Mark.
Mark just
money in the chat.
Mark just broke a record. Mark just broke the super chat record.
He's on fire. He's on fire.
Yeah, and then once again, Linda, read Money Master the Game. Like, I'm begging you. That's going to help change and guide you a little bit, but that book will also help you as well. So you got a couple great pieces of advice. Message Rashad. You can roll it over to IRA. Go read Money Master the Game. Then you can enjoy the time with the babies.
Yeah. Linda, I put the his emails right there in the Zoom webinar chat, so it'll be there. And just hit him up.
Okay, thank you so very much. I appreciate you guys.
No
Thank
problem.
you, Linda.
And yeah, Mark did actually change his.
Yo,
his
YouTube
Avi.
don't miss a thing, right?
Shout out to that. I noticed that. Mark changed his Avi. He did.
He got his picture in there.
He's a regular. I wanted to say something. I want to do a little teaching to kind of break it up a little bit.
Let's do it.
We're gonna get back to questions in a minute. But so all right. So the thing with this show is that it's a variety show. So we wanna educate you guys. We want to show you slides. We want to answer some questions. But the biggest thing is to empower you with information. So every single show, we want to try to give you like a little bit of knowledge that will help you in your vocabulary as far as the stock market and learn, the inner workings of how the market works. So we talked about Amazon. So we have to know what consumer discretionary is and consumer staples.
Yep.
So the consumer discretionary points to goods and services that are non-essential. So goods and services that are non-essential. So one of the top ETFs in that field is an ETF called XLY. XLY, so some of the top companies in XLY is Home Depot makes up 12%, McDonald's makes up 6%, Nike makes up 4%, Starbucks makes up 4%. But it's interesting because Amazon makes up 24%.
Mm-hmm.
So Amazon actually makes up a quarter of XLY. So even though it's a consumer discretionary ETF, 25% of it is in really a tech company. But
Right.
Amazon's kind of like a hybrid of everything. So
That's weird because it's like by definition it's non-essential, but like you would ask most people, Amazon's pretty essential at this point. So then you have consumer staples. So consumer staples are goods and services that are deemed essential. So one of the top ETFs in that space is XLP. So XLP, Procter & Gamble, Pepsi, Coca-Cola, Walmart, Costco, Colgate. So you see, if you don't know anything about Coca-Cola and Pepsi, you might say, okay, why is Coca-Cola and Pepsi deemed essential when Amazon isn't? But now you got to dig a little deeper. And that's the whole thing with the stock market. It's like once you start to learn about stocks, you actually start to become, more business astute, and you start to break down businesses because you understand that Pepsi and Coca-Cola, they own 50 different companies. Mm-hmm.
They own, Quaker Oats, Tropicana, Dasani, Powerade, Minute Maid, to say a few.
Yeah, and then Coke is the same thing. So when you talk about Gatorade and you talk about all these,
well, those companies were the company combined.
Yep.
So now you start to understand. So if you noticed a couple weeks ago when I talked about the technology ETF, which was XLK. So now it's starting to make a little sense, right? So XLK, XLY, XLP. So now you start to see that it's all in the same family, right? Where XLK is the technology ETF, XLY is the consumer discretionary ETF, XLP is the consumer staple ETF, right? So now it's like I said, it's like Spanish. If you around Dykeman long enough, you start to understand
something.
It starts to all make sense to you after a while, and then you realize what they were saying. Why they started to talk Spanish in front of you when they could speak English. So I'm always leery of somebody that speaks a different language and they speak English fluently. And then when they're around me, they start speaking their own language. It's like, you can just speak English.
No, they telling you, they saying something.
You're saying something.
They saying something you don't want it. They don't want you here.
That's a little off topic, but
it's a personal thing.
So now if you're just looking at it, you would assume that consumer staples would probably perform better than consumer discretionary, right? Because it's like consumer staples is something that you actually need when discretionary is something that you actually don't need. But the interesting thing, like if you look at the charts, XLY's chart, 5-year chart is like booming. XLP, not so much. Yep. So that just says a lot about, especially Americans, we value a lot of times discretionary items more than essential items.
1,000%.
So when you look at investing, especially during this pandemic, right? You would think that a company like Amazon might be struggling during a global crisis where you don't essentially need nail filers and a bunch of other stuff that people get on Amazon. But Amazon business has been through the roof because regardless of anything, psychologically, we spend money on things we don't need. Doesn't matter.
Mark not playing.
Nah. Yeah, they said Google won't let them sit anymore.
That's funny.
Somebody call the ABC boys.
Yo, Mark, that's the options. That's the options game for you.
Yo, listen, and I'm glad that we stopping for just a second. Make sure y'all screenshot that. If you're on YouTube, screenshot that. If you're in the Zoom meeting, go to YouTube and screenshot that. What Mark is doing is, he's just providing a service right now, man. He's giving y'all game within the game. You see what I'm saying?
Game within the game.
And from a marketing perspective, it's genius too. Because we just talked about it, doubling down on the customers, right? Yep. So, Mark, you got to be on, right? But you do an amazing job at just giving companies that are great. So, Hack, dope, ARKK.
Oh, don't even say it. Don't even say it because this is an incentive for people to actually watch the show live. Because shout out to everybody that's going to watch this on the playback. But the people that are watching this live, they can actually see that. Only people. This is an in-game moment. Only people that's actually in the game.
Some things you can't show.
You can't see everything.
Shout out to Smooth.
You can't see everything. You can't see everything. Yo, I was in Vegas.
Give him context. Give him context.
I was in Vegas. We was in Vegas. We was in Vegas probably like 10 years. This is the first time we ever went to Vegas our entire life. And we coming from New York and we don't know how to act. We in Vegas. So we at the New York hotel and they got the roller coaster on top of the hotel. So, you know, this is when Facebook was big. So I got my cell phone out. I'm like, yo, I'm trying to figure out like, how can I take a video to experience this, to put it on Facebook. And I never forget, Jamal told me, he's like, look, some things they don't need to see. You can't show everything.
Yeah, we was big on pictures. He's like,
can't show everything.
Now some things you got to live and they can't see.
Some things you got to just experience in the moment. In the moment.
That's one of them. I screenshotted it though.
Yeah. So
I'm gonna come back to that, Mark. I appreciate it.
That's a live moment that will never be duplicated. But shout out to Mark for the free game. But yeah, I just wanted to just go over that because I know we talked about Amazon before, and a lot of times people might be you know, a little intimidated with the price of Amazon stock.
Mm-hmm.
And it's like, just to get in, you got to spend a couple grand. So, you know, that's one way. And once again, I'm always going to go back to whether it's index funds or ETFs, where it's an easier way to get invested in the stock market. And you're buying a bunch of different stocks as opposed to buying one. And it's a much, much, much lower price. So, yeah. Once again, so now you guys hopefully have a good understanding of the difference between consumer discretionary and consumer staples. So when they say that on the news and they say that on CNN, consumer staples, consumer discretionary, that's what they're referring to. And like I said, now you see the family of XLK, XLY, XLP. So
yeah, and everybody in EYL University, those ETFs that Shadi just spoke about, I put them right there for you to see. So yeah, go do your research on them. Yeah, for sure.
For sure. All right, let's get back to a few more questions.
Yeah. Who we got? Nasir. Mute yourself. Never seen that name before. So he's new to the game. Mute yourself. You've been unmuted. What's up? Oh man. You there?
All right.
Oh, there you go.
What's going on, brother?
What's up,
brother?
Yeah.
I'm good, man. How you?
Pretty good, man. Day one earner here, man. Shout out to y'all.
I appreciate you. Appreciate that.
Oh, I got a question for Ian. I was reading Money Master the Game. I was wondering if there was any extra books you had suggestions of, you know,
for long-term investing or for trading.
I take all of them, honestly.
If you want to go the trading route, God rest his soul, Mark Douglas, all of his books, but Trading in the Zone, absolutely amazing. I think he's probably the greatest trading psychologist of all time. Michael Covell has a bunch of books, but like Complete Turtle Traders, very good book, and Market Wizards by Jack Schwager is absolutely amazing. It's a book that's a combination of investing and trading. So Complete Turtle Traders and Market Wizards, and you'll be good.
I also like How to Make Money in Stocks by William O'Neill. That's like one of the.
I haven't read that one.
You haven't read that one? That's a real good one.
Through it.
Yeah, How to Make Money in Stocks by William O'Neill. Highly recommend that book to anybody that's interested in the stock market.
Appreciate that, y'all.
Thank you.
Appreciate you. Welcome to the family. All right, who we got? Is this Alistair? Alistair, unmute yourself. You've been unmuted.
How's it going, fellas? I'm new to EYL University.
Welcome to the fam.
Welcome.
Thanks. I had a question. So I've been talking with some of my family members about, all of us putting our money together and investing in some stocks. So I want to know your thoughts on starting an LLC and investing in stocks through the LLC. And we all each own a portion of the LLC instead of us doing it all individually.
Shaw, what you think?
First of all, YouTube. You guys
y'all crazy. Yeah.
Chill, man. I don't have, I just had it. I had something in my throat, man. Let's come on, man. Y'all got it. Y'all got to chill. So
I hope not, YouTube. I hope not. He right next to me. Come on.
If I got Ronan, we all got Ronan. That's how
y'all gonna be shut down.
That's how we rock it. If I'm going Nino Brown, if I'm going down, everybody's going. I'm taking out everybody with me, man. So, but no, as far as investment clubs, I think investment clubs can be extremely beneficial. And it's interesting that you say that because people do that as far as whether it's churches or even like fraternities or sororities. Sometimes like they'll pull their money together and they'll set up an account and they'll have an investment. So there's no reason why a family can't do the same thing and have an investment club, really. And you can now, the only thing is you want to establish, some kind of governance. Even if it's friends or family, you want to establish some kind of governance. You want to establish guidelines and just make sure that everybody's on the same page. But yeah, not only from the standpoint of pulling your money together, but pulling your resources together as well, because it's like, as far as your brain power, because even with us at Earn Your Leisure, even with Ian, we tap in with him time and time as well. Like we usually have like morning investment calls. So we'll go over like different stocks every morning and get everybody's opinion on it. And then we'll say, all right, well, this is what we want to do. Like we don't have an investment group, but we still kind of consult each other. So you're always you can run fast alone, but you can run far together. So
that's a fact. It's a fact. It's tough. Like when we come up with different companies, now it's like I could focus on 3, Shadi can focus on 3, Jamal can focus on 3, and now we got 9 to 10 companies. Mike can focus on 3. We got 12 companies by 9 a.m. You know what I'm saying? It's tough to do that on your own. We come together and it's like, yo, all right, well, let's weigh the options here. Like, all right, that sounds like a good idea. Like, what's the research on it? You know what I'm saying? So like, just working together like that is super, super beneficial.
Yeah. Mark gave some more. And The Color of Money. That's actually interesting. I haven't read that book yet, but I heard good things about The Color of Money. So I'm gonna check that out. But yeah, thank you for your question though, brother. But yeah, I definitely think that there is power in collective group economics, and investing is no different. So from a financial standpoint and just from a brain power standpoint as well.
And shout out to
What about from like a tax standpoint? Like, is it beneficial for us in terms of taxes, instead of us being taxed individually, being taxed as a corporation?
Well, the LLC is a pass-through situation, so you're gonna have to file that on your personal tax return anyway. So I don't necessarily know I don't think you're gonna get a special tax benefit for investing purposes through the LLC, because, like I said, it's a pass-through. So you're gonna have to file that on your personal. But we're gonna bring an accountant on here to actually talk about taxes in more detail. I hate to talk about taxes because I don't want to lead anybody in the wrong direction. That's not what I do for a living. But yeah, I mean, that wouldn't be the reason why I would do that. But yeah, Ian, do you have anything to say about that group investing?
No, you touched on it, and then I want to shout out to Cool Killer on YouTube, who said Google Family LLC. Yeah, if you guys start an investment club, just make sure like you got good legal in place, but also only do it with people that you get along with. Because if you don't have a good relationship and you tie in money, things can get super messy. But so I have to make sure that I say that as well. But yeah, when we have an accountant on, that's going to be amazing to walk you through some of that. But group economics. Amazing. We don't practice it enough, but yes, you're headed in the right direction. Buy quality. That's the only thing I'm going to stress to you, to stress to the family, to buy quality. Even if the shares cost more, you'll be better off in the long run. You won't go through all these emotional fits that a lot of people going through buying Gush and some of the GE and some of these other companies.
And by the way, YouTube, Mark actually already has an open invitation. He's a personal mentor of mine. I speak to him probably every day at this point. So he has already been given the
people want to see him. They want to.
You know what? The show is actually becoming like a storyline, because now you have outside entities. Like you have Mark, who's not on the show, but technically he is, because he's on every week and he gives like a $500 in super chats. So now like the regulars actually know who Mark is. So they want to see. He's like Ghostface Killer. Like nobody's ever seen his face.
And now he just showed his face, man. Mark, we could have had a whole thing, man.
Yeah, you wasn't supposed to show your face, Mark. You gotta
switch to Abby again, man.
You gotta keep your face concealed until we bring you on. But shout out to Mark, man. And that's just, and you know what? But that actually just speaks on the community aspect of EYL. Me and Mark, I didn't know Mark. He actually got introduced to Earn Your Leisure from somebody that he was mentoring. He checked out the show Market Mondays. He fell in love with the show Market Mondays. And from there, he just started giving a bunch of money in super chats. So I reached out to him, and I developed a relationship with him. And he's just a really smart dude. And he knows a lot about investing in options. And like I said, he's become a mentor of mine. So even we talk about networking, it's not just like a fairy tale. Like this is a real situation. Like this is somebody that, we met, we networked with, and now he's become part of the EYL family. So Ian's the same way.
We gonna chain him tonight? EYL Mark?
EYL Mark.
There it is, chaining day.
EYL Mark. So yeah, Ian's the same way. Ian came, he did the podcast. You know what? I realized
spoke about that.
I've only saw Ian for like 2 hours in my whole life. And that's the crazy thing about technology. We feel like we know each other so much because we speak every day via text or phone call, and then we see each other via Market Mondays every week for a couple of hours.
And
so
the voice notes.
From technology,
I know, right?
It feels like, you know what I'm saying? It feels like, yo, we great friends because we know each other so well. But I've only physically seen him one time my whole entire life.
Once.
Yeah.
We were just reminiscing on that with the director's chair. And
the director's chair.
Oh yeah, that's crazy.
The director's chair was crazy. That was crazy.
Yeah, that was interesting.
He is the illest.
What'd you do with that footage?
Yeah, I'm gonna put it out one day.
All right, that's the behind the scenes footage.
Yes, behind the scenes. Yeah.
Yeah. Shout out to everybody on YouTube. I saw Drew said it's 2 shares of Amazon good. Listen, any shares of Amazon is good. Like start with 1. That's great. You have 2, even better, man. And shout out to Prudent Mom. She was on here last week. She was in here earlier. Today's her birthday. Happy birthday, Prudent Mom. I saw you put that message in.
Yeah.
Shout out to the earners over there.
So yeah, let's get back to some more.
Alice, appreciate you. Hold on, it's real quick. It would be the 9 o'clock hour, but it's the 7 o'clock hour. So we gotta go over the earnings and then I'm gonna let you.
All right, let's go.
Thoughts at Macy's. So Tuesday, tomorrow, we got FedEx, and it's going to be interesting, right? Because we've known that it's a stay-at-home economy. A lot of people are getting packages. Obviously, Amazon is one, but FedEx is another. So it'll be interesting to see their earnings. And then Wednesday, man, Macy's. Macy's. We've seen Neiman Marcus file for bankruptcy. We've seen JCPenney go out. J. Crew went out. Macy's holding on for dear life. I will be interested to see their earnings because they don't really have a strong online presence. They were doing like the coupon thing for a while, but they really don't put too much effort into being on social media. So I'm anticipating some real down numbers for Macy's. And then General Mills also on Wednesday. That's another one. We spoke about Chewy a few other weeks when that stay-home economy where more people are shopping, going to the supermarket, buying things. My kids are eating up my entire house every week. So I'll be interested to see what General Mills does as well.
Yeah.
You want to throw your darts at Macy's now? Go ahead.
Shout out to everybody in Macy's that work in corporate. Don't cut off our deals. I appreciate y'all. As far as the stock though, man, I know you guys are going to ask. Terrible. Don't do it. Maybe a decent trade. Terrible though. Like top 5 dead or alive, worst of the last 5 years. Do not do it, please.
Yeah, they're in big trouble. They have inventory from. I was reading the reports on them. The inventory from the spring was never able to be put out. They're thinking about trying to hold it on to the next year. Then they're trying to think about what they're going to do with the fall. Because when you do merchandising, you order 2 or 3 seasons ahead. They didn't even get to finish their winter season. They're going to miss the entire spring and fall. Who knows? So all these retail companies, man, it's going to be tough unless they have a strong online presence. And even then, like we saw with Nike last week, they had a strong online presence. Their earnings are good online.
Yeah.
The retail stores the stock
were devastated.
Hammered. They got hammered last week. So yeah, man, it'll be interesting to see what happens with those. So those are our earnings calls for the week.
Yeah, and yeah, I went and look too, and it's crazy. Like the social, anytime you see somebody sneeze these days, you're on.
Listen,
anxiety.
if he cough and I'll sneeze, listen. Hey, we're gonna be on here. We're gonna distance and keep it rocking.
The next time you're gonna see Shai, he's gonna be in a different camera. You're like, wait, you got in a different location.
My anxiety level was at an all-time because like I was sleeping like last week, and I'm like, I had like a little scratch in my throat. I'm like, damn, like
Bro,
they done got me.
You just telling me that?
Nah, because you're like paranoid. Because now you're like paranoid. Like anything that happens, you're like, oh, I like shook this person's hand 3 days ago. This person wasn't wearing a mask when I was in the store.
I mean, especially here in Houston, because nobody want to wear a mask. So I'm like, even going to the mailbox, I'm like, boy, I need to mask up for real. Rather be safe than sorry, and then
no glove, no love. I remember they had that. I was in a bar in New York early, and they was like, that's when he was wearing gloves. They was like, yo, no glove, no love. Like,
can't get in.
Yeah, shout out to, I think this might be the highest super chat that we've received so far.
Wow.
$150.
Wow. Annoyingly amused.
Annoyingly amused. I like that. That's a hard name. Fractional investing in Charles Schwab firm have it and one. Do your research.
All right.
Super chats. Tell you what. It might.
Let me screenshot
we changed schedules today, so it's a little less as far as our usual audience.
Mm-hmm.
But the super chat, I think this is the most super chats we've ever received.
By far.
By a landslide.
Yeah, not even close.
No, it's on fire.
Alexis, been patiently waiting. Unmute yourself. You've been unmuted.
Hello, can you hear me?
Yeah, we hear you. What's up?
Hello. Good evening. I just wanted some guidance on if I should get into a 457B and an IRA through my company. my employer? If I should do both or one or the other?
I'll answer that. 457 plan. You work for the government?
Yes.
Okay. Yeah. So governmental. So like for general YouTube purposes and people that might not know. So the 401k is for for-profit organizations. 403b usually is for nonprofit organizations like churches, hospitals, schools. But a lot of times people aren't familiar with the 457. So once again, this goes back to, so now you start to learn the terminology, right? So we talk about XLK, XLY, XLP. So now you got the 401k, the 403b, 457. Notice they're all in the 400 range. So it's the same thing as far as you put money in and you get tax benefit. It lowers your taxable income. The money grows tax deferred. It's taxed on the back end. So it just depends on what kind of company it is that. So once again, this is kind of get your understanding of how this things work. So the 457 is a little different than the other two because everyone is different, but it has more flexibility about when you can take the money. I think you can take the money out at 55 years old instead of 59 and a half with the 401k plan. So the 457, it might be beneficial for you to put money into the 457 and an IRA if you can. Sometimes it's not really like a one or other type of thing, especially, I don't know, working for the government. I'm assuming that you have a pension plan as well, correct? You have a pension?
Yes, I do.
Yeah, governments always have, the government employees always have pension plans. So yeah, I mean, you want to take advantage of your retirement. So the IRA allows you more flexibility usually as far as to like kind of pick and choose more investment options, where the company plan, if they match, I don't think the government, they probably don't. Do they match the government? Do they match the 457?
No, they don't. That's why I didn't get into it when I first was hired.
Okay.
And now I'm wishing that I would have, even though they don't match.
Yeah. So, I mean, I hate to give this kind of advice because it's an individual situation. So you have to know a lot of different factors, but you can do both. You can do both and take advantage of both because they both have pros and cons. But I would definitely look at the investment options that you have available to you in the 457 compared to the IRA. And if you have different investments that you can do in the IRA and not doing the 457, then I would take advantage of both.
Okay. Appreciate you.
Appreciate you, Alexis. And appreciate you, Max, in our EYL University Zoom chat for putting out the options that Mark was putting up from YouTube. We appreciate that tremendously.
Yes. Shout out to Mark, another $99 super chat.
Oh, wait,
he said charts don't lie. He's a technical analysis guy. Charts don't lie unless
y'all get a chance, man. You gotta bring up my coffee.
Unless you're Luke and Coffee.
Luke and Coffee has officially, it's been delisted, correct, Ian? Yeah, it's been delisted. We don't have to talk about it anymore. It's been delisted.
I'm gonna talk about it.
Dead in the water.
Dead.
Dead in the water.
Can you give us the official Luke and Dead?
Luke and Dead. Lucan is dead officially. Nothing but slow singing and flower bringing at this point. So,
EYL Jamal, what's going on, bro?
Fellas, what's good? What's the word?
Everything good.
What's up, man? How you feeling?
I'm doing all right, man. Lucan is definitely dead. It is what it is. Hey, listen, I had a question, right? So if you're, I got pretty much all of the FANG stocks at this point, and I'm looking for like rotation, like looking longer term. Like if you're gonna hold something, I'm thinking about either getting into the semiconductor section or the consumer discretion, right? Because I know that there's still about $5 trillion that's sitting on the sidelines that hasn't been pumped into the system. Mm-hmm. Would you recommend starting to look at some of those things? Like even using an example as like ExxonMobil, only because they have a tremendous balance sheet, right? They also paying a dividend. But I think on a longer term scale, do you see some of those things turning over as this economy continues to go?
Yeah, they'll go up, but like if you're looking at the oil sector, the dividend is good, but it's not. The chart isn't good. Like one of the things I always say, like the fundamentals are baked into the technicals. So Exxon wouldn't be one I would go to. Semiconductor, yes, but if you give me a couple that you're looking at, I can throw you a little lob about which one you should lean into.
Well, I was just talking about the sector in a whole, just because I know that some of these stocks are kind of beaten down.
Yeah.
And you can't, obviously you want to own as many tech stocks as you can and have strong balance sheets, but some of these other ones are going to hopefully pick back up, over the course of 12 to 18 months, Yeah,
semiconductor space I like a lot. I like a lot because it's a direct play into tech. So
Okay.
I would lean there if I'm looking long term. Then of course, like Facebook with the advertising thing, they're getting killed right now. So Facebook is going to take a little bit of a beating, but like we talked about earlier, Amazon, Apple, but that semiconductor space is super, super strong.
Right. And then with Facebook, you know, I mean, if they get beaten down, like my whole thing is just buy more of it. You know, they're not going anywhere.
They'll be around for a while. Yeah. And plus, even with that, like Facebook was close to they hit the all-time high 245 and slid down. They were going to come down off those highs anyway, but for people that have been in it 4 or 5 years, and that's why I would say if you buy quality, man, once you hit that 5-year period, you're golden. It's everyone that's trying to hop in and out that's really getting killed.
Right.
Yeah.
I appreciate.
Shout out to Annoyingly Amused, another $150 super chat. We appreciate it. She said it's this time she wanted to invest in value I'm sorry. I don't know if it's he or she. They want to invest in value companies. Would love to invest in a university in any way. I can speak on fractional investing. Sure, we would love, hopefully maybe you can teach a class for us on EYL University. If you can email us, just email us at info@earnyourleisure, and we work it out. We appreciate your support. That'll be dope.
Yeah, Ian, what you think? What's your thoughts on Facebook? Zuckerberg, is he just playing hardball here? Because Jack Dempsey with Twitter, he was like, "Look, we're not gonna tolerate any type of hate speech." Zuckerberg is kind of like freedom of speech. You see big investors pulling out. Coca-Cola. Well, they didn't pull out. They suspended their ad campaigns. Coca-Cola, Verizon. Every day it seems like a new one. What do you think? Do you think he'll cave in and say, you know what, we're going to follow the same line that Twitter did?
At some point, Zuckerberg though, like he's a very interesting entrepreneur. And I don't want our Facebook and Instagram accounts to get shut down, so I'm not going to touch too heavy on it. But as a long-term investment, Facebook is good. I think there's some companies that are better, but I think at some point they will have to make some adjustments to what they are letting. But when you have a platform that big, it's tough to decide how you're going to regulate what speech is allowed when some of those sections are putting in a lot of money. And I get why a lot of companies started to back out, but they did that before. They'll be back in a year and a half, 2 years when the coast is clear. They're really just trying to stay away from the political cycle.
Yeah.
But long term as a company, they'll be good. But they'll probably drop back to under 200 at some point, and then they'll be a good buy again.
Yeah, people got to really understand the advertising business that Facebook has. Like people, when we look at the biggest advertising day, we think of the Super Bowl, right? And that's like 110 million people watching every day. Facebook has the luxury of having 3 billion people on their site. So it's just like a different ball game. So it'll be interesting to see.
Yeah. It's interesting though. I mean, it's arguments that I guess can be made on both sides, because it's like, how do you determine what's hate speech, right? And then
I think the lines are clear, but it's a tough game in corporate to decide to want to cut, because they don't want to ruin a particular fan base either.
Mm-hmm.
That's the tough part, to make that decision. Like, okay, are you going to appease this side or this side? So, I mean, and of course, after the political stuff that happened with Russia and the bots and all that, they know what it is, but also Facebook is now older demographic. TikTok, Instagram are younger. They don't want to kick off a certain part of their base either. So it's a very fine line that they have to toe, which is pretty interesting to see.
All right, we got one of our outstanding EYL members, my main man, Duncan. What's up?
Peace, gentlemen. How y'all doing?
Everything good. What's up, bro?
How you?
Everything's all right. I just had a quick question. So, Ian, I came on a little late. The time threw me off. But I don't know if you spoke about it already. But, Ian, I know you dropped the jewel last week about the moving averages and following the 200-day. So when I started to research it more, I found out there's a simple exponential and the weighted. Is there a benefit to using either one?
I would say master one, because simplicity is a lot better, because if you start, that's one of the biggest things in trading. So once you add too many indicators, too many tools, you start to deviate from them. I like the exponential moving average a lot more, but you'll get similar entries on an SMA and an EMA. Weighted is going to react heaviest, or is going to react most violently to like the most recent action and based on price, which is a good thing in some scenarios. But when you're long-term investing, you want a simpler entry, so you don't have to guess, because if that line moves, then you're going to be like, I don't know if I should buy. So anything that causes any kind of confusion, I'm going to want you to stay away from. So just stick with the EMA and you'll be fine. But thank you for doing the research and actually taking the time to look at it.
Oh, that was a jewel that had me on the speed bump all week. Like as soon as I heard you say that, I stopped everything and said, I'm gonna learn that.
Yeah, the EMA is powerful. You will love it. You will love it.
I appreciate the wisdom.
Thank you. I appreciate that.
Appreciate you, Duncan. Like I said, man, that's an outstanding member, man. Duncan's been in the book club. He's an active member. Duncan is
honor student.
He's an honor roll student. High honor roll.
Honor student.
Dean's list.
EYL Dean's list.
There it is. Judith, you've been unmuted. Unmute yourself.
Hello, first time here. Super excited to join you.
We're happy to have you. Welcome.
Welcome to the party.
Thank you. So my question is on biotech stocks, specifically INO, but in general, there are a bunch of them that have grown exponentially, I guess, with news on whether they're going to have a vaccine or not. So I took profit at my exit. Well, I only took half profit at my exit, which was enough to make up what I put in. My question is, how long do I hold these biotech stocks? I mean, if one wins, the rest of them will crash, I suppose, or at least will lose some value. So is there any barometer on length of time to hold?
Ideal time is 5 years. If you're worried though, so if you don't want to put all of your money and bet on one stock, you can invest in a biotech ETF, which I'm gonna throw this lob to Rashad because I think he mentioned it before, so I don't want to take credit for it. But great job on executing on that one, taking profit. But Rashad, tell her the amazing ETF that she could potentially invest in.
Yeah, I am. But first, before I do that, I want to just say, actually, so yeah, we're supposed to have a guest today, and we was actually going to talk about biotech. But at the last minute, it was something, a very, very serious situation that came up with Dennis. So he called me. He was very remorseful. But, things happen. That's why we improvise on the fly.
Mm-hmm.
But Dennis will be back. He will be back. But he just couldn't make it today. But he actually was going to talk about biotech. But Ian actually has something that he's going to be rolling out about biotech, incorporating biotech. So I don't know if he wants to talk about it this week, but we'll talk about that. But BBH is a ETF, a biotech ETF that you can invest in, and there's a variety of others.
We talked as well is amazing.
Yeah. And we talked about a couple companies before on the podcast. Yeah. So yeah, I mean, you don't want to necessarily put all your eggs in one basket if you're solely relying on a coronavirus cure.
Yeah.
Because it's like, okay, what if this company that you're invested in doesn't do? Or a lot of biotech companies are still good companies, but they still I just personally think that you just don't want to invest in biotech just for coronavirus.
Right. There was actually some research because like when we were preparing for it, there was a company, Vertex. I'm not sure if you heard of them, but the ticker is VRTX. They actually are seeing 99% growth over the past 5 years, and they have nothing to do with the coronavirus. The coronavirus hasn't even affected them. They actually treat like cancer and neurological disorders. And they're up 77% for the first quarter of this year already. So there are plenty of biotech companies that have nothing to do with coronavirus. So look at those as well.
Yeah, but yeah, biotech industry is definitely something that we were actually looking forward to covering today, but change of plans happened at the very last minute. But we will be covering biotech in depth very, very soon for sure.
Awesome. Thank you.
Yeah. Thank you and welcome again. Thank you, Judith.
Welcome.
What we got here? Gary B, what's going on? Unmute yourself. You've been unmuted.
Gary, what's going on?
Gary B, he at the fridge.
He's at the fridge. He's at the fridge.
Mo, we coming to you. Unmute yourself. You've been unmuted.
Man, we here?
We here.
What's up? Man, hold up. We down here in H-Town, man. Staying indoors. Indoors AF.
Yo, Ian, tell them stay inside, man.
Hey, you got to stay inside. No Galleria for you.
Man. Hey, matter of fact, I work at Apple. We are closed. So thank you for telling these boys about Apple being, I don't want to seem too Spanish, but Apple is a great product. Anyway, hey man, I do appreciate the blackness. I appreciate the education. I appreciate hey y'all, Ian, well, first and foremost, Trevor Rashad, thank you. I am an EYL University member. I was down here when y'all did show up and pull up down here in Houston.
Oh,
Okay.
yeah. We had a good time out there.
Yeah, we had a great time out there. Can't wait to come back.
Man, please, safely, please do, brothers. But hey, man, Ian, I do appreciate your transparency. Dude, I picked up the book by Tony Robbins, Money Master the Game, 7 Simple Steps. And I'm kind of at a crossroads. I'm either, again, with admiring your transparency, dude, should I continue to read this book and join your stock club, or should I just join the stock club and put down the book?
Yo, bro, Ian, hold on before you answer. Like, yo, this sounds like a Wu-Tang skit right now. Like this is crazy.
Wu-Tang is for the babies, bro. Wu-Tang is for the babies. Rest in peace, ODP.
Well, first, I would say thank you. You funny. We got to get together when everything open back up. You funny as hell. You got to read the book first. I would say that because I want you to have a well-rounded view and then get different perspectives. And then also you'll be able to see what I'm saying isn't full of it, right? And then after that, if you want to, you can join the stock club. But if you take the advice out of the book and you want to kind of
man, that July 4th, July 3rd, it's already in my calendar. 1 hour. Yeah. So
and then on the 6th, we're gonna do something special too. So I appreciate you. But yeah, and if y'all could do me a favor, like tag us and Tony Robbins post, because I know I done sent probably
he gotta get you an affiliate
15,000 in book sales, right?
You need your PC off that, man.
Yeah, but it's like, my thing in terms of being transparent, I hate when people don't like source where they get information from and what books actually help them. That book helped me a lot to just digest my perspective to take on the market. So I took the index part and then I added my own part with tech with it, put them together. They had a beautiful baby and it made it a lot easier. But you have to do both. I want you to be informed on your own. So if you never get anything from me but the book, I'm perfectly fine with that. But I got a couple of little things that they've done well this year.
I'm taking from this do both. Just read the book and then jump in once the weather is right, because I'm really thinking the information from both of these in tandem is financial literacy, dude. It's a big thing right now.
Appreciate you, Emo.
Man, hey man, y'all boys be safe out there. Appreciate it.
Yes, sir. Yo, Emo got the line of the night. Yo, Ian, he got the line of the night, man. He said, "I appreciate the blackness."
I appreciate the blackness.
I'm taking that.
I appreciate it.
I appreciate the blackness.
Yeah,
it's spreading. Omar, what's going on? Unmute yourself. You've been unmuted.
Guess not.
Dang.
Guess not.
Getting the laundry.
Let's talk about. Ian, you want to talk about? You want to talk about next week, like just a preview?
Yeah, go ahead.
All right.
Come on. We got Styles and Jada. Come on.
So July. All right. So you're doing a flash sale on July 3rd?
Yeah, for 1 hour, 7 p.m. Central. It will be cut off at 7:59 sharp. So for those of you who want a considerable price on the current version of the stock club, 1 hour only, no exceptions.
Okay, so that's at 7 o'clock Central Time on Friday.
Yep.
1 hour, and then me and Ian was talking for a while, and a lot of people have been asking for this. Even members that's in the stock club, they just wanted different opportunities, but a lot of people didn't get a chance to get into the stock club. So being at the stock club is $5,000. So I don't know what you're lowering the price to, but we wanted to kind of have like a new program that would allow people to get in at a much lower price for a short period of time, a window. So yeah, that's going to be rolling out on July 6th, the next market Monday, which will be at the regularly scheduled time. And it's going to be growth stock. So it's different. It's different from the Red Panda stock club. It's going to be a whole different entity. So Red Panda stock club members actually should join as well, because they've already seen the success of Red Panda. But it's a whole different entity. And you'll get me talking points, but I don't want to misquote it. But from my understanding, from having the conversations with you, it's going to be an infusion of long-term dividend plays, growth stocks. We're even going to talk about like biotech, some biotech situations in there, and it's going to be a completely different menu.
Yeah. So I know everyone's like, okay, great. Apple performed well, Microsoft performed well, index funds, great. But we always get questions about what about the ones that are like growing at a faster rate. So those like the high performing stocks. So there's a couple sectors that I looked at. Then also month 2, I'm going to roll out the dividends that I like. So when most of you guys are picking like dividends like AT&T, if you look at the chart, it's falling. So it's like, and I've always said, like, if you get a dividend company or a dividend from a company, but the stock is falling, it's like being in an abusive relationship, but you're getting a Chanel bag once every 3 months to offset for the bad behavior. So month 2 in the club, I'll give the dividends that are going up and pay a good dividend. And then month 1 will be high performing stocks, because I think people are looking for some better returns out of the market, even though, you know, the stock club is doing amazing. So I want to put those two together. And so even if you guys like Google dividend stocks, it's not going to be the ordinary ones that you get, and the high performing ones. No, I don't. It's to Larry Mesa. I'll say that. AT&T, no, is not a good company. If you look at the charts don't lie. The fundamentals are baked in. The price is baked in. It's not there. So the price will be affordable. And then I think you guys, if you guys like the first version of the stock club, you know, I think y'all will like this version as well of the high performance stock society too. So
yeah, we're gonna do a Instagram. We're still on for that Instagram live, right? We'll have some more details at the end of the week.
July gonna be crazy
about that, and then we'll officially roll it out Market Monday.
And can I address this in YouTube real quick? The real MJ, I appreciate you. I know you say you shouldn't be investing if you have debt. I'm gonna be real with you. If you are Black, you need to pay off debt and invest at the same time, because the average time that it takes someone Black to pay off their debt is 14 years. Be real with you. Go text your aunties, your cousins, your homies, and ask them how long have you been paying off debt? You have to split them up. It takes us longer. It's not like in other cultures and races are we able to get money and then help in that process of paying off debt. And as a person that's debt free and worked hard to be there, it's great to be debt free. Man, I'm mad that I missed out on investing from 2003 through now. If I can do it all again, I would have been happier having a little bit more debt and piling that money into Apple, Microsoft, Google. I promise you, because in those 15 years, I probably missed out on 3,000 or 4,000%. So it takes us longer. If you don't believe it, if you're Black, put in chat if you're debt free. It's not going to be many of us. The average Black family only has $1,000 for an emergency. Got to stop being bougie. That's why we're here every week to try and help. Being debt free is absolutely amazing, but damn, we miss out on a lot of money and we're not able to help our family. Because if you're debt free, I'm gonna be honest with you. What happens when you go debt free? An emergency happens. Corona happens. Car breaks down. Grandma gets sick. Now, all of a sudden, you debt free and you can do your debt free scream and you're happy. Great. And grandma gets sick. Now you're paying $500 a month for pills, or now you're paying $100,000 for surgery or chemo. So it's a combination of both. It's not same thing. It's not real estate or stocks. It's both. It's not debt free or investing. It is both, right? So I just want to clear that up. I appreciate you saying it, but it takes us a hell of a lot longer to pay off debt than it does most people. So my bad about the Kanye rant.
That's a fact. That's a fact.
No, big fact.
Can we just get like 2 more questions before we
Yeah, let's go. Mario, what's going on? Unmute yourself. You've been unmuted.
Okay.
Yep. Mario, we going. We moving on. Ernest, unmute yourself. You've been unmuted.
Gentlemen, shout out to the Ernest. Shout out to YouTube, Ian, Shard, Troy.
Appreciate you, bro.
Real quick, fellas. I got a question. Probably more for Ian, playing at Ian, in regards to sell back. I want to sell something back where I purchased at a really good price, and then I bought more at about 50% more. So now when I sell back, say it drops down 30, 40%, should I sell that number of shares that I purchased at a higher price and keep the lower price ones, or just hold on?
A, can I get you to do all my voiceover work and host all my zones?
Absolutely, brother. You hooked me up already. I got you.
What stock are you in?
This is Fastly, man. I know we talk about it. I'm happy. I was in it. I got in early at $12. I bought more at 18, and so I bought more at 60. Right. So now I'm like, all right, well, I could sell 1/3 of that or quarter of that actually. If it goes down, should I sell it and just hold on to my lower price shares and then buy back in if it dumps, further, let's say back to $35 or so.
Man, you got in at $13 on
That's what I'm saying.
I got it at $12.24 one day, bro.
You don't need no advice, man.
Fastly. Remember, it's crazy, Ernest. I sent Ian the article about Fastly and how it was the #1 growing stock this year, and we both were like, "Yo, what?"
I mean, the company's pretty solid from what I'm seeing. The stewardship looks great. They're not really profitable yet, but the service they're offering, they have Amazon as a customer, Shopify as a customer. They have a lot of these larger businesses are using their platform in order to deliver content at the edge of the networks, which is huge right now, right?
Yeah.
So, it's like they're, even though they're going so high, they look solid as all hell. So it's like, do I ride it or just do I try to, see them and come back in?
Man, you got an amazing price. You really don't need any advice. I will say though, if you're worried about it, because it's going to come down some.
Yeah.
But if you think that it's going to be one of the ones that, because it was down almost 10% today, but that's because the entire market got drugged down. But for a second, but I think you need to write down what level of profit you're good with, and then how many shares you want to let run, because I mean, it has a chance to potentially go to 100 within a couple of months. So anytime that you're unsure, because the emotion is kicking in and you're looking at the percentage that you're up, you got to go look at the chart. So you already did your due diligence about the company. It could slide down some because it's close to those highs. It's going to come down some, but you can't panic. But you need to know how long you're going to stay in it. So you need to know coming into it. It's like when we date somebody, we know like in a certain time period if they're going to be with us.
Right. No doubt.
So you need to see if Megan, like this is gonna be a Meg Thee Stallion, you're gonna be a fling, or there's gonna be Beyonce.
This is wifey right here, man. She wifey.
So if it's wifey, you gotta know how much profit you gotta take off the table, but then let the rest run. If you believe in this company like this,
I'm a savage.
Sure. Hey, thanks, Ian. I appreciate it, y'all.
No, I appreciate it.
Ernest, we appreciate you calling in, bro.
Oh, come on, man. Come on, Troy. No doubt. I got you, Ian. I got you real talk,
man.
I need that.
Yo, Ernest, you gotta text me. You got a call like falsely at 13, man. We need to talk, man. That's
Come
crazy,
on, brother.
Hey, man, I do. I got you.
Yes, sir. Appreciate you.
Yes,
Ian, who do you have tonight between Jadakiss and Fabulous?
Man, it's so tough because I love both. Fab gonna kill him with the girl joints though. I like Jada. In my opinion, I think Jada is probably one of the most underrated lyricists of all time. I only say that because he's the only person I heard on multiple songs with Biggie, and he was like right there in pocket with Biggie. But I think Fab gonna put on the show on whoever got the best Wi-Fi. But I'm rocking with Jada. I love Fab to death, but I'm rocking with Jada.
You taking Jada?
You go.
I'm going Jada.
Okay.
Who you got?
I am, and no disrespect to 914. We love Kiss. But I just know Fab got them songs that's gonna please the crowd, man. He has a lot of them. And like the same way you said that he's one of the most underrated, I think Fab, and it took for my young boys to tell me, like, yo, Fab the nicest. I was like, what? And then I was like, you know what? This dude is consistent, man. I'm gonna go Fab.
Fab nice.
Yeah, he got too many.
Since Fabulous Sport, he got a bunch of.
He got a lot of joints.
And he bring out them clue tape.
A lot of heat rocks. I know Kiss gonna end with the Benjamins, but I think Fab got a lot of joints.
We'll see, man.
Who you got?
Rashad, who you got?
I mean, Jadakiss is a hometown hero where we come from, so I gotta go with Kiss. But not just that. I mean, Jadakiss, he never had a whack verse. 25 years, I never heard him spit a whack verse. So
that's true.
Jadakiss is a lyrical legend. So is Fabulous, but bar for bar, you got so many songs, man. So many songs.
This one I did not want to see happen because I love them both so much. Like I don't want to see them hoop against each other, but this is gonna be tough, man.
I'm about to put on the Champ Is Here 3 mixtape before we start this verse battle. The champ is here. I need that, Jada.
Yeah, so we're gonna see, man. But this was 90 minutes, 95 minutes actually. Extremely good content. I never get disappointed with Market Mondays ever.
Shout out to everybody on YouTube and all our EYL University members, man.
Yeah, we moved it up on the fly. Next week we will be back at our regularly scheduled program. with some big bombs that's going to drop next week as far as the new rollout for the program. We'll talk about that this weekend sometime on Instagram Live, probably just to kind of give some details. But anything that you want to tell the people, Ian?
I love you guys so much. Thank you for rocking with us every single week. If you need a good book on investing, Money Master the Game is a great book. Read it. It's thick, but I promise you it'll change your life. Thank you guys for all the support. It means a lot to me. Like, you guys made a dream of mine come true. So everybody in Zoom, all the earners, and everybody on YouTube, execute, study, execute is not as hard as you think. Focus on 4 quality companies and just buy them like crazy. I don't know, when Jada roll out that Mariah Carey verse, man, it's going. I'm looking forward to the night. And then follow your passions. Like, for my business owners, couple of great gems. Focus on your customers, and then, like how Mark was doing tonight, give value. Like, you'll get your base and people to follow you if you help them in advance. Like, help first. Like, same thing that Troy Rashad has been doing, helping, bringing guests to you that you never would have heard otherwise. Give first. So I'll end with those 2 business gems.
Please like this video on YouTube.
Like and share, please.
Please,
Yes,
like the video. Shout out to Valencia, EYL alumni on the check-in. She said, I just missed it. She was late, but it's gonna be saved.
Val, what up? Yogi, what up? Yogi just text me. What's going on, bro?
You can watch the playback. And yeah, shout out to everybody at EYL University. We had a few questions that we just couldn't get to for the interest of time, but we try to get to as many questions as we possibly can on EYL University. Make sure you guys join the private investment group. Make sure, sorry to anybody that couldn't get in MG's Breaking Bread class yesterday. He used the wrong Zoom account and it cut him off at 100, and he reached that like within 1 minute. But he's going to do something special on Tuesday, and then that's also going to be archived on our website as well. This week, we have a special real estate class that we're going to do. That's going to be on Wednesday. And then next week, we have cryptocurrency.
Yeah, man.
Shout out to Frisch Charles, EYL alumni. He's going to be teaching a class for us on cryptocurrency. We got a lot of stuff.
Yo, you forgot tomorrow. Tomorrow, episode 87, bro.
Episode 87, EYL comes out tomorrow at 5 p.m. Eastern Standard Time. This is a groundbreaking episode for us. It's the first time that's our international episode. We did an interview with a couple out of Montreal, Canada, and they have LS Liquor, which is a liquor company. They have their own independently owned liquor company. Is actually a really good product too. I tasted it.
Yeah.
Out of Canada, out of Montreal, Canada, by way of Haiti. So shout out to all the Canadians, all our Canadian supporters. We are coming to Toronto, Canada as soon as this thing clears up. That has to happen. So yeah, we got a lot going on right now.
Yeah. So shout out to everyone who's tuned in. You know how we end this thing, man. Call someone, reach out to someone, tell someone you love them, check in, tap in. We love y'all. Love is love, man. We'll see y'all next week.
And that Derek Grace episode was fire too.
Thank you.
I appreciate it, bro.
Classic episode. Shout out to Derek Grace for sure.
Legendary.
More fire upon your head top.
Okay, Jada.
Love is love, y'all. We see y'all. Peace.
Love y'all.